Hello tubers! Good morning, good afternoon, good evening, wherever you are, and welcome to Coopersthaiadventures. Today's topic on Money Matters is how to supplement your monthly income. And most of us have an income each month to live here. Typically it's pensions. In some cases, pensions, for some of us aren't enough. And it might be, but we'd like a little better income, say, for standard of living. And that's what I'd like to discuss today. Things that I've done to supplement my monthly income. I have the Canada pension and old age pension, and together they're definitely couldn't live on that strictly in Canada, but you can get by here on that. I prefer to do better than get by, so I've done some investing, and I'd like to share that with you today. Before I get right into it, though, most of yous, including myself in the past, have had investments, and typically, in my case, I've used banks as my advisors. Get into mutual funds. I realized shortly after that maybe that's not the best. And I went to a couple investment advisors. I was quite young with the first one, and he was a hot shot, but the returns weren't there. I think it was too new. The second one I went to sounded like, and I think he was a nice guy, and his story was okay, but his idea was, hey, I'm going to put you into mutual funds and some managed money funds, and you won't have to worry. And I thought, well, that sounded like his story was not bad, I thought. And for that, I think he was charging me 1.5% of my portfolio. Well, after a couple years and a little more research on my own, I realized that, and then I hit him with a question. Now, in these mutual funds you have me in, are they charging fees? Oh, yeah. Well, the mutual fund fees are anywhere from 2 to 3% typically. Some could be more. And I'm paying that as well as my advisor. So, my heavens to Betsy, that could be 3 to 5% in fees each year. So, my advice on that tip is to ask, if you're in mutual funds, as I was, and managed money funds, which I've also been in, what are the fees, and as well as paying what's my advisor fee? Because it's tough to beat markets or do well when you're paying that level of fees. So to make a long story short, I decided to do my own investing, not having to worry about the fees with these financial advisors. Now, just before coming today to do this, I did Google search, and over 80% of advisors don't beat the Standard & Poor's, the S&P 500 averages in a given year. In fact, when you get into the large money managers, there's less than 2% can beat the S&P 500. The 30-year return on the S&P has been 9.9%. That's pretty good, and you can actually do the S&P yourself through what's called the SPY, the SPY. It's a ETF that's traded on NASDAQ. Very, very low fees, management fees in that, and it will track the S&P 500. But myself, I've gone a little different track, and I'll get into that. But lastly, as you well know now, even money market funds, 30-day GICs are paying pretty healthy, up to 5%. Some are a little over. How long that'll maintain? Can't see them keeping interest rates too high too long, just because the governments won't be able to afford the interest payments on them. So how long that'll maintain, I'm not sure. Okay, so that get back to my situation. I realized, as I've mentioned in other videos, that boy, this standard of living is okay in Canada and Florida where I wintered, but the cost of living was jumping dramatically. through inflation and many reasons why that was happening. But being proactive, I thought, you know what, maybe I should look at how can I reduce expenses. And the one I really focused on was my Florida property because it was jumping quite a bit in value, good, but also in cost of maintaining it. You know, property taxes were going up, common area fees every month in the park I was in were going up. Yeah, so just insurances. That was a situation where I thought maybe, hey, I'll save all that expense money as well as have the capital to invest. So it's kind of like a win-win. So the tip there is, hey, look at ways you can reduce your expenses at the same time. If you can free up capital, even better. So that's what I did. Now, along with that, I mean, I had another vehicle down there that I was insuring. I had it leased, so there was a payment made. And fortunately, I was able to get out. They paid me to get out of the lease. It was during that time when the used prices went nuts. So that was the only time in my life I was able to make money on a lease. But yeah, so that was good because that actually saved not only insurance, the lease payment, but fuel and other expenses that I wouldn't need that vehicle sitting there doing nothing. So that was another expense I was able to eliminate. Now, that brings me to Thailand. Obviously, I did enjoy wintering in Florida, but then I realized, hey, there's some Asian countries I could do the same in. Why not do that? And that's brought me to Thailand. The income opportunity I created occurred from the sale of the property. And what I did first, and this is what I recommend everybody do, is research. I wanted to be able to sleep at night, and I felt in order to do that, I better darn well know what I'm getting into. I think a lot of people blindly, possibly buy a stock or invest in a fund or do something, and they've got an idea what it is, but did they really do a lot of research on it? And I don't mean 2 or 3 videos. You want to do 200 or 300 hours research on something that you're planning on putting a lot of money in, let's say, which is your retirement. So that is a lot for everybody. With me, my research started with Bitcoin, and I didn't necessarily say, well, that's fine. I believe in Bitcoin the more research I did. But is there a way I can do it through the stock market? And what I realized and found out is, yes, there's proxies, meaning stocks that I can own that will generate an income to me that when Bitcoin does well, I should do as well with it. And the one particular I'll just talk about today is Riot. Riot is a Bitcoin miner. It's the largest mining stock, largest market cap stock in the Bitcoin field of mining Bitcoin. And it's debt-free. I'm big on companies that have no debt, and that's one of them. So not every company, you have to have manageable debt, let's say that. Better yet, if it has no debt, they're going to survive where maybe other companies wouldn't. And the reason I like that going forward is with the halving that's coming next year, a lot of the Bitcoin miners' costs will double. And should the price not double, then they could possibly get into a situation which is not advantageous. Without debt, you're going to survive, is my opinion. And so how do I make money on Riot? Well, they don't pay a dividend, so that was out. And what I did research on was, initially I started by selling a put. Now, what is a put? So a put is an option, and it allows someone, if I'm selling the put, allows that the buyer of the put, for every seller there's a buyer and vice versa. And I preferred to sell the puts because that gave me income right away. When you sell something, I got paid. The risk to me was that I would have to buy the stock. So the buyer of the put, when I sold it, someone bought it, they have the right to buy, make me buy their shares of Riot. Now Riot's trading at $9.33 currently, And initially, on today's value, I would have probably sold the put at $8, $8.50, $9, something close there. But I was saying, hey, I'm willing to own Riot stock at that price. But in the meantime, should it not hit that price or goes up, let's say, I keep all the income from the sale of the put. And just as an example, I would go out a month, and in today's values, if it was here, I have it in front of me, I use barchart.com, by the way. It's a free service. They do have ads, so I pay for the ones without ads. But anyways, initially the first quite a few months, I just used the free service. They list all the option prices, and one other thing with Riot that I liked, it's very high volume, so it's easy to get in and get out, and there's lots of trades in the options. But the stock closed on Friday at $9.33. They have a $9, sorry, the puts here. They have a $9 put a month out. Let's go there. Get this, sorry, I should have this right near a month, so that'd be 1, 2, 3, 4, the 27th of October. So it's in fact 27 days out. The $9 put, meaning I would have to buy the stock at $9, would pay me 70 cents a share. Now I usually trade in 1,000 share lots, so that'd be $700. So what am I doing? I'm committing $9,000 of my capital. It sits in my account. It's the value of the 1,000 shares that I could get put to buy for $9. So there's the money. It's segregated, let's say, but it's still in my account. Along with that, for selling the 10 calls, there's 100 shares per, sorry, selling the 10 puts. There's 100 shares per put contract, got me $700, and that comes into my account immediately. So what happens? Well, 27 days from now, one of 3 things has happened. The price has stayed the same at $9.33. Well, the option expires, worthless. I keep, the option was at $9 and it's $9.33, so nobody's going to, make me buy their stock at $9 when it's $9.33. So I keep the $700. My money gets desegregated. In other words, I can take that $9,000 that was tied up in my account, committed, let's say, and I can use that for another sale of a put. So then that's one. Second option, the price has gone up. Well, if the price has gone up, the guy's certainly not going to make me buy the shares at $9. So that's the same as the first option I gave you. You keep the $700 and your money's not segregated anymore. And the third option, where the price drops below the $9. Now, if that happens, say it went to $8 or $7.50 or $8.50, whatever, it's below the $9 strike price, I'm committed to buy the 1,000 shares at $9. I end up owning the 1,000 shares. The 9,000 that I had segregated in my account goes out of my account, obviously, to the seller. So now I'm sitting with my 1,000 shares of Riot. Cost base is $9. Oh boy, what do I do? It's trading at $8. Well, what I would do is I'd sell a call. I'll get into that in a minute. On the stock at whatever, $9, $10, $11, and get some more premium in. So there's if the worst scenario happens, there's a way out. This is simplified terms, folks. There's a lot more videos on about selling, cash covered puts, as I mentioned. But we're not risk takers, so I would always sell the puts below what the price currently was, usually out a month, because I'd like a monthly income. And I figured, hey, the worst that can happen is I own the stock, which I like. I researched it, right? And then I would sell calls against my stock, which is currently what I'm doing now. So a lot of the stock I own, I was able to get it at lower prices than what I initially was looking at. But then a funny thing happened. I thought, well, geez, maybe this stock's going to take off, and what do I do then? So I decided to switch to buying the stock outright and selling calls. And that's another way of generating income. So on today's example with Riot at $9.33 close, if I went out a month at, say, $10, so in other words, I would have to give up my stock, at $10, but then I've made $670 on that, I would collect $630 premium for the month. And I keep that, again, with the 3 examples. If the stocks, stayed below $10, I keep the money. If it's at $10, I likely keep the money, or, close to it. And if it's above that, then I would lose the stock, but I keep the money and, get my $10 a share, which I've made money on. But anyways, yeah, so to me, it was kind of and the funny thing is, when you look at selling calls or cash secured puts, it's a less risky way of getting into a stock or owning a stock than simply buying the stock outright. And the reason for that is because the premium you get theoretically can reduce your cost base. So that's an interesting fact. Okay, but anyways, that's basically what I do. I do it on a monthly basis. Currently, I probably do it on about half of my stocks, because I do want to keep, even with Riot, I don't hedge at all. What if it did go crazy? Then I do want to participate in a terrific upward move, and I generate enough to supplement my income. I actually make more on doing that than I do in my pensions. So the current stocks I have in my portfolio, I might as well just share that with you. Riot, Clean Spark, another debt-free company, MicroStrategy, which to me is a pure play Bitcoin. So rather than owning Bitcoin on, say, an exchange or in a cold wallet, hot wallet, whatever, I do it through MicroStrategy. So that's the one stock I do not hedge, because when Bitcoin does go, it'll definitely go with it, and I don't want to be, left out in the cold. So, and then I've got a bit in Hut 8 and also Mara, but not too much. Mara's got issues or a bit of debt, but they're also big cap. And Hut's going through, I think will come out at the other end of this merger. They're going through quite well. Okay, so that's enough for today's. Please like and subscribe. Send some questions off. I'll be happy to answer everyone. And lastly, if you be proactive for your own retirement, do your research, look into these things. Definitely, I don't want to tell people what to do. That's just what I've done. And it's very important not simply to follow someone, including myself, until you do your own research and you become comfortable with what you're looking at doing. And last thing is, on this, sure, I've done it on these Bitcoin proxies, but there's terrific stocks out there. You can do this strategy with, Microsoft, you can do it with Google, you can do it with Apple, you can do it with some high dividend payers like there's Dow, Enbridge, Bank of Nova Scotia I'd look at. These are all paying anywhere from 5 to 7% dividends per year return, let's say, and you can increase that by maybe 2 to 4%. So, 9 to 12% returns in a given year, and keep your stock, so something to look at. Okay, so that's enough for today's. Please like and subscribe. Send some questions off. I'll be happy to answer everyone. And that's it for now. God bless. Have a good day.